Hello traders, my name is Tomasz Wiśniewski. I'm a Chief Analyst in Alpari Research and Analysis, and this is daily analytical report, and I will tell you about the best trading occasions that we have on the market right now, and about the factors which are driving the price right now. And it's quite an interesting day, interesting end of the week. We have a few fundamental events. We have quite a lot technical occasions on the market, so let's start. We always start with the calendar, but I think that the most important events are not on the calendar. The most important events that drive the markets are not on the calendar, because overnight North Korea fired another missile. It flew over Hokkaido, which is a Japanese island. So it's a similar situation that seen 2 weeks ago, when missile launched by North Korea resulted in a risk-off mode, resulted in a bearish gap on the market, on stocks, for example, resulted in increased appetite for precious metals. But this time it's different. That launch was totally ignored by the markets, which is not surprising. We are not surprised about that, because we were warning about the possibility of such an action, that market will tend to ignore news from North Korea, because actually not many people do believe that there's going to be a war, that North Korea will do something. So that's why traders are not falling into that. And this time it didn't spark any reaction on the market. We couldn't see any reaction on stocks, any reaction on precious metals. So that was totally ignored, which was expected, well, at least by us, but can be a surprise for some of the people, because with the range of that missile, Guam Island would be hit, right? So with that launch was in range of the Guam Island, but at the end of the day it got totally ignored. The main information is, well, at least on the currency market, at least for British pound, is that Bank of England policymaker, Mr. Vlick, he turned hawkish. He was dovish before, and now he turned hawkish, and he said that he may support rising interest rates in the near future, and that caused a massive upswing on British pound. So yesterday we had a huge upswing. Today we have a huge upswing, and British pound is doing just great, and you can see that all over the market. So what he said is, I quote, "If this data trends of reducing slack, rising pay pressure, strengthening household spending, and robust global growth continue, the appropriate time for a rise in the bank rate might be as early as in the coming months." That's what Mr. Vlick said today. Yesterday we got this Bank of England statement, which was perceived as hawkish. Today we have those words from Mr. Vlick, which also are very hawkish, and that helps the British pound to climb to the levels seen straight after the Brexit referendum results were revealed. Close to the currency world, we have cryptocurrencies, where we do have a carnage of all actually cryptocurrencies, which is led by Bitcoin, but others do follow. Two exchanges are about to be closed down at the end of September, and apparently we got information today, a few hours ago, that Chinese regulators expect all exchanges to be closed at the end of September. So not only those two that already said that they are going to be closed, right? So this caused sell-off. Well, maybe it didn't cause a sell-off, but this sell-off is continued on cryptocurrencies, and that would be actually it from the fundamental point of view. What happened? Let's look at the calendar, because still to come 24 minutes retail sales data, and American dollar is much weaker today, which I will show you once we're gonna analyze charts, but maybe that can be changed in 23 minutes. So that's Friday, and let's see what is going to happen, what we should expect next week, because it's always good to be ready for the forthcoming week. And in order to do that, let's see what should we expect next week. Let's check now. As you can see, calendar can be pretty rich next week. What we'll start with CPIs from Eurozone. We will have Reserve Bank of Australia minutes from their meeting on Tuesday. We will have on Wednesday a non-monetary policy ECB meeting, and FOMC press conference, and rate decision and economic projection. So it will be all about Wednesday next week. On Thursday early morning, the European session will not start, but late at night, let's say late at night, we'll have interest rate decision from Bank of Japan along with the press conference. And on Friday, we'll finish with PMIs from Eurozone and CPI from Canada. So that will be a good week in terms of the data. Every day we'll have something, so we shouldn't be bored next week. That being said, let me open the platform for you and let's see what's going on the market. So I can see, well, let us start with Bitcoin. This is a daily chart, so those last 3 days are catastrophic for the Bitcoin. We just touched levels below 3,000 for one Bitcoin. We fell as deep as to 2,900, 2,900, let's say 80 for one Bitcoin. What we do have here is 61.8 Fibonacci of the recent upswing seen from the middle of July, but also we have those that bottom from the beginning of 2015, and that's 38.2. That may be a strong support. Well, we do have a combination of few factors here, right? So we do have those two Fibos. We do have psychological barrier of $3,000 for one Bitcoin, and we do have this horizontal support here created by those highs from June and July. So this actually is an area where we can get a reversal, but not a sustainable reversal, because according to the typical chart of a bubble, and this is a typical chart of a bubble, what we should have now is a bull trap. So all those traders who missed those results, who missed that upswing, that uptrend, were looking at that and they were saying like, oh my God, why I didn't invest in that? I should have done that. Now they will enter the market because now they can see a great price. They can see 3,000 for one Bitcoin. It was 5,000. So they can see a great price right now. They will buy, hoping that they will see 5,000 again, which will cause an upswing. Let's say maybe to here, but eventually the price should continue to fall down. That's a typical bubble. In my opinion, there are high chances that it will happen. I don't want to say that it will happen for sure, but for me, there are high chances that this will happen, and we will keep our eyes on it, on this instrument, because it's going to be very interesting if this typical bubble chart will happen here on Bitcoin. But I don't want to say that I'm more than sure, but there is a high chance that all those traders who missed that, because now everybody's talking about Bitcoin, and many people were not buying because the price was high, but now they will see the price of $3,000 for one Bitcoin and they will buy it, right? And chart of a typical bubble will look like that. So what we do have here is a wait and see approach. Bitcoin is getting bigger and bigger attention worldwide, and that is a very interesting situation here. Actually, we were warning about the possibility of a reversal, but I guess that we are somewhere here back in that day. Now I would have to check the analysis because it was about the bigger ATR, and huge ATR is typical for local tops and bottoms and strong reversals in general. Okay, but that's the Bitcoin. Let us go to not to cryptocurrencies but to other instruments, and maybe we can start. Okay, we can start with euro dollar. The price bounced off the horizontal resistance. They were not even bothered to use the trend line, so the sentiment is positive, still positive on euro dollar. As long as we stay above the trend line and this horizontal support, the sentiment is definitely positive, even with this double top formation, which can scare a few bulls from the market. But that's where the magic happens. This is the scandal from Brexit. This is exactly the scandal, so you can see that we are on the highest level since the referendum. That horizontal resistance was not a trouble for the buyers, but well, we had a strong fundamental influence here, and it can still be used as a support, right? And let's look into the perspective right now, because we had the long position here. We are buying here. We closed that position here. We earned 130 pips. How much would we earn now? Well, a lot, 650 pips. And we were buying here on a nice support, and as you can see from that, the price is just going up. First potential target is the downtrend line seen here. And I don't think that the price should have any problems with reaching this resistance. Okay, so there is after maybe a correction, after 140 pips correction, there is a potential to climb 250 pips higher from now, and from those bottom to more 400. S&P 500, but it looks now more like a rectangle. Sentiment is still positive. We are above all major supports. We are close to the all-time highs, just a few points below. Not much to add. Sentiment totally positive here. New Zealand dollar to American dollar, unfortunately no trading signal, so I will allow myself to delete that. And on gold, we don't see a big reaction. We don't see actually any reaction after this missile. What we're having here is still an uptrend. in the long term, right? Because we are still above the uptrend line. What the price is now drawing on H4 is a hammer. That hammer can be an end of the right shoulder of the inverse head and shoulder formation. That green area is a neckline. So once there's no support here, so once this upper green area will be broken, that should renew our buy signal here on gold. WTI oil is heading for new highs. That's a positive situation here. When we will break 61.8, the next resistance will be trend line, and after that the horizontal resistance here. But the sentiment on oil seems positive. Right now the price started to make higher highs and higher lows, right? This is a higher low and this is higher high in the long term, because that's a daily chart. So that can potentially be a nice reversal, and it's me saying that I'm negative on oil. But again, in the same time, you have to read the price. You have to try not to be biased, because that's the trading market does not care about your opinion. So I'm trying not to have opinion or have an opinion, but trade what the price is trying to tell me, not my opinions, right? And here the price is obviously trying to tell me that they want to go up, because the price started to make higher highs and higher lows. And actually, if I would delete those lines here, what do we have here? For me, it's a inverse head and shoulder pattern, left shoulder, head, and right shoulder. So that is actually a strong trading signal. Euro to Japanese yen, new highs. Nobody should be surprised as we do have an uptrend, so the price in general is making higher highs and higher lows. Silver, same situation as in gold. So the price did not even touch the uptrend line, but they used the first horizontal support for a bounce. That can potentially be a great trade in terms of risk to reward ratio. So if you're entering with a long position here, stop loss is somewhere here. 10 cents. But the potential movement is much bigger. It's like 40 cents, 4 to 1. Euro to British pound. A Bank of England statement. Today's comment from Bank of England member. We broke 38.2. We broke this horizontal resistance, and now we're stopping on 50% Fibo, and we almost got here. That's a very strong downswing. Is 50% important? Well, if we consider those, yes, but as you can see here, this support lost the significance, and now we have those two gray areas. In the long term, we do have a nice uptrend line here. That can be that combination of this gray support and a trend line can stop an upswing, at least for a bit, can trigger a correction here. So watch out for the long-term uptrend line here. That can potentially be a nice place for a bounce. Canadian dollar to Japanese yen is doing what was expected. Yesterday we said that it's a good occasion to buy. Okay, because of the inverse head and shoulder formation and swaps. We said that here, that it's a good occasion to buy. The price went significantly higher. And the scenario of the inverse head and shoulder formation is in play right now. Euro to Australian dollar, not much is happening. I'm gonna delete that. Australian dollar to American dollar, defending on an uptrend line, but no actual strong trading signal here. And DAX is creating a nice looking ascending triangle formation. Ascending triangle is a bullish pattern. We do have a bullish trend after the breakout of this upper line of the wedge and this horizontal resistance on 12,300 points. And then we had this bullish gap at the beginning of the day, Monday, Tuesday, Wednesday, Thursday, Friday. The price is creating ascending triangle, so that's a horizontal resistance and inclined support. And in every book about trading, you will read that that's a buy signal here. Once the price will break the horizontal resistance, the buy signal will be created. Bitcoin again, we can see, we can call it a dead cat bounce. Right now, there are people who are trying to catch falling knife, but it's a legitimate support at the same time, right? So we shouldn't be surprised. That's what I said. Those people who were not buying here, they were just looking at the charts and they were saying like, oh my God, why I didn't buy? I would be rich right now. They are doing it right now because they saw lower prices. American dollar to Canadian dollar. Yesterday's better data from US failed to failed to deny that flag, and flag is a trend continuation pattern, and we know that American dollar to Canadian dollar loves those trend continuation patterns, as we do have here, here, and here. And this one is actually in play right now because the price broke the lower line of this flag, which actually triggers a sell signal, so we should see a further drop. Dollar index. So dollar is losing heavily right now. We still have 6 minutes to retail data, to retail sales data, but on dollar index I would like to show you the beauty of correction quality pattern again, because if you're following us, you should know that already that a correction quality pattern works. So those three rectangles are the same and are taken from this first correction. Second one was a little bit bigger, but that's just a false breakout above the trend line. And third one was almost equal, just a small head here, but that was also a false breakout here. False breakout, I can label it with a green color. Here it was a false breakout above the uptrend line. The price touched horizontal resistance created by this bottom and is now going down. So we have a combination of few bearish factors. So a false breakout above the trend line, bounce of resistance, and a correction quality pattern, and that gives us a strong sell signal. So we shouldn't be surprised with the price movement here that the price is falling down sharply. It can be reversed obviously with better data from retail sales, but again that's just lottery. American dollar to Polish zloty, my local currency, so they bounced off 351, but they couldn't force the first local resistance. I don't even want to mention the upper line of the channel down formation or this one. They bounced, they used the first local resistance for a reversal, so we can see that the downtrend, which is actually seen from the December 2016, is very strong here. It's going to be very hard to stop that. American dollar to Mexican peso, we are getting closer to the breakout of the lower line of the symmetric triangle, which should trigger a strong sell signal. But before going short, you have to keep in mind this horizontal support here, but the chances for a bearish breakout are increasing. And then if we would have a worse data from retail sales, that can be possibly a game changer here, and a worse data from retail sales can trigger a sell signal. On this pair. American dollar to Japanese yen. You can see that American dollar is weak, but Japanese yen is much weaker. So that creates an opportunity to climb higher, but on American dollar to Japanese yen, I don't see actually any good trading setup. American dollar to Swiss franc, also without a nice trading signal here. We are in a range between this red resistance and this green support, so no interesting trading signal here. The same goes with euro to Swiss franc. So now we are 3 minutes ahead of the data, so let me create a here screen with the instruments that I would like to look at when the data will be released. Okay, I will take gold, American dollar to Mexican peso. I will take euro dollar, obviously, and I will take American dollar to Canadian dollar. Okay, ahead of this data, gold is falling down a little bit, but on the rest of the instruments, American dollar is much weaker. So now we'll have 1 minute 30 seconds to the data. A few seconds before the data, you will see we should see some choppy movements on the market. That's always the case. Let me turn on the Twitter. We'll see the data live. Now we'll have 1 minute. Retail sales from United States in 30 seconds. Core retail sales is expected to be 0.5%, the same as the previous number, and retail sales is expected to be 0.1, and the previous number was 0.6. In the same time, we'll have Empire State Manufacturing Index, which is expected to be 18.2, and the previous one was 25.2. 5 seconds. And we do have a data. American dollar is weaker, so probably the data was worse than expected. We do have new daily lows on American dollar to Canadian dollar, which goes along with this technical pattern. On euro dollar, this data goes along with the trend. Here on American dollar Mexican peso, we will see if that will trigger a trading signal, and gold is gaining because American dollar is weaker. So that's just a typical reaction of the market. Let me see if we do have this number. Core retail sales was 0.2 instead of 0.5, and retail sales was minus 0.2 instead of 0.1. So that's the data, minus 0.2, as you can see, worse than expected. So reaction is typical for this kind of data, and the movement should follow. Thanks very much for watching daily analytical report, and see you next week. For more information about trading, visit our Twitter account and our website alpari.news.